much of your life in. We want to go and bring the night.
Yeah.
Sleeping in.
Jonathan, are we ready?
I'm coming. I'm.
You just, oh, thank you, thank you.
Andrew, you're good.
Thank you so much. Good evening, everyone.
Gotta get louder.
Sure, you're on.
I have my lights on.
Yes.
Yeah. Right up. Good evening, everyone.
Quiet.
Good evening, everyone.
Hey, it works.
Thank you all for coming. We're going to call the meeting to order at 7:02. So we'll call to order the Little Compton Budget Committee and joint and with the town council in presence for our public hearing. And then we're going to have a regular meeting after our public hearing. So our agenda tonight is basically to call the meeting to order. We'll have we'll open the public hearing in a few minutes. We'll take your comments on the public comments. We'll close the public hearing. And then the committee needs to review and vote on minutes from our previous meeting, vote on the warrant items and finalize our votes for the budget book, and then discuss and vote our budget committee report that will go in the budget book. But we really wanted to have a public hearing before we finalize the book, and we worked very hard to do that. So Corey and and Martha, our assistant town minister, has worked very hard getting the budget book put together. I don't know what Martha's title is. I'm sorry if I missed your title of Martha.
You get a promotion.
And they worked very hard to get this thing put together, and we have to turn it around to the printers very quickly because it takes several days to print, and then it has to go to the mass mailer to get mailed to everybody. So it hits the charter's deadline. And so I really appreciate everybody coming tonight, and we really we want your feedback, and then we will, if you want to stay as we continue the meeting, that please do so. With that, is there any other announcements? Any communications? All right, so item number 4 is open public hearing on preliminary recommendations of budget with the town council in attendance. So we'll do that now, and then we will prepare for your comments. Does anybody have anyone wish to make a statement? So I don't want to hold up any comments anyone might have, but I just wanted to let you know how much work that the committee and our finance director and our town administrator and Martha have done to get the budget prepared and to you in a way that I think is fairly comprehensive. And the committee has focused on a couple of areas that I think are important. One is long-term planning. For the first time in several years, we've got a 5-year plan in the budget book. So I think it's the first time in 5 or 6 years that there's been actually a 5-year plan in the budget book, which is a requirement of state law, but it had not been in there. And we have spent time discussing with various departments their needs and where they are in the budget. We've had the finance director and the town administrator here several times to go over items and taken their input. And we've had several regular members of the public have been here and commented almost at every meeting. We really appreciate that. Sometimes it's a little lonely being here. Sometimes it's not. And then Larry Anderson's our moderator this year at the financial town meeting. He's been attending our meetings because he's very engaged in trying to make sure that we have a financial town meeting where everyone who wants to participate can participate this year. And so and Larry has been attending meetings to make sure that he's up to speed, and he's been briefing the committee on his efforts on that part. So if anybody has any specific questions about that, Larry's here in the audience and we can help you with that. All right. And with that, I'm willing, we'll open the floor for public comment. If you can, please, because it's we're streaming online, so we need to come to the microphone. If you can state your name and address for the record too. That'd be great.
My name is Sal Marinosi, Salvatore. I live on Oliver Lane. First of all, thank you to the Budget Committee and all involved. I happen to know how much work goes into this. And I don't take it lightly when you hand us a report and a projection. I look at all the work that goes into that and I realize the hours you go through. I just would have one request. And that request would be that we postpone the town meeting until we have an audit in our hands. I made that statement last year. I said that I will vote for it this year without an audit, but I won't do it again. And I'm going to stick to my gun. And I really believe that it's just good government for us to do that. I realize I talked to John and he said, the numbers are good. The numbers are good to me when I have an audit. And I would like to see an audit. Thank you.
No, Sal, I want to thank you very much for your comment. And I do remember last year at the financial town meeting and the public hearing, your engagement in this topic and your concern. I would like to raise a couple items around that, if you don't mind. One is, the audit is a look in the past and it's looking backwards at the financial well-being of the town's previous year, right? So it would be about a year and a half backwards right now. And I think the audit is really important to me because the possible findings that are in there about financial irregularities or challenges or things that the town needs to address, those to me are very important. And we've had some significant findings in the last few years. And then also I think it helps people understand, where our budgets were versus what's actually happening, right? But that doesn't deal with the fact that we have a fiscal year coming and it is our obligation as a town to pass a budget. And so what is your recommendation that we would do if we postpone the meeting until we had the audit?
My recommendation is to push for the audit as quick as possible and have a meeting immediately afterwards. You said that the audit is findings of the past. You're correct. I'm a contractor. You don't build a house without a foundation. You don't do a budget without an audit. And we're never going to, I respect you, but we're never going to agree on that. And the reason we're not going to agree is because I've been in situations in business where an audit turns up some things that absolutely no one could ever think of. And an audit, anything is possible with an audit.
Well, I would say after this last couple of years, I would say you were well founded by that statement, that we definitely need to know what is going on with the town's finances. I can tell you that I understanding your position last year, and I have pressed the town council president several times about when is the audit going to be ready, because we as a committee have also feel very strongly like you that it would be much easier to do our job if we had a current audit. I know that the town council, I think, has spent quite a bit of time with and went out to bid and got a new audit firm that is more capable than our past audit firms. Scott Lewis made a really astute observation a few meetings ago where he noticed that basically the town had a history of using the audit firm to basically build our financial books versus Portsmouth that uses the same firm had well done books and accounting, and the cost of that audit and the speed at which that audit would be done would be much faster, right? Now, as my understanding, Mr. Magny has got our books in order. We've spent quite a bit of money on external firms to go through our books, they basically had to reconstruct our books last year. And he's telling us that he's very comfortable with those numbers. Now, it's not an audit, but again, if we don't have a financial, we're required to have a financial town meeting. There is no option.
However, may I interrupt?
Absolutely.
However, I think, legally, you can continue with your spending on the same basis until you have the financial town meeting. I think there's a loophole, or not a loophole, but there's an ability to get the audit at the end of June and then move and have a financial town meeting right afterwards. And we should not be passing a budget without an audit. It's bad practice.
Right. And so I understand that, but let me pose something to you. What if you were, say, a firefighter, a police officer, one of the public servants in town, and we don't pass a budget, you don't see your raise, that your cost of living increase, right? That are contractually obligated, that we're contractually obligated for. So we can't provide those to people. And so now we have contractual obligations that we can't meet. So my concern is that I think we'll have an audit fairly quickly. But I don't think we can proceed with a budget, with delaying a budget, considering that we have obligations that we must, I mean, I'm not disagreeing with you, Sal, at all. I just think that if something came up in that audit that was severe and significant that we needed to look at, we as a town could have another special financial town meeting and revise our budget. We could do lots of things. So I just I don't know how we delay this process.
Well, the budget is going to be the budget from date of X.
Yeah.
And paying people back to that date is not a big deal. I mean, that can be worked out. Retroactive back to the date once it's passed, because it's assumed that that's when it would have been passed. But to go ahead without us seeing an audit and then looking at the budget, studying the budget with the audit and taking that information in is, I think, paramount. And I can't say it any other way, except I ran millions of dollars worth of work. I mean, millions, a lot bigger than this town. And we didn't go forward without knowing where we were.
And I appreciate that greatly. I just, to me personally, when John tells me that he understands where things are at and the amount of work that he has put in getting things where, and John has I think a great record in town. He's got the schools books running fabulously well, right? He's done a Herculean effort in the last year and a half here trying to clean up this.
Again,
right?
I could praise John. I mean, he's done a great job. I mean, everybody, the whole council has done a great job. You people have done a great job. We've been through some bad times, but because of that, we shouldn't move forward without an audit. Make us both right and say, we're not going to move forward. We're going to find a way to get that audit in and have the financial town and do the whole thing right. I just think that this is a time for us to bite the bullet and do what we said we should do last year and what I committed to last year. I won't take any more of your time.
I thank you greatly for that, and we will definitely, and I would invite you to stay if you wish for our regular meeting while we'll bring this up and talk to Larry as we move forward.
Anybody that knows me knows I'm a town person. I don't want anything bad to happen to my town. And I'm sure, I'm almost positive there's no surprises coming in the audit. I want that practice. I want an audit.
Yep.
Thank you.
No problem. Yes, Mr. Kenny, can you please step up and? I know, he's here every night with us, so. It's been really, really very helpful. Thank you so much.
My name is Vincent Kennedy. I'm a resident of Big Drum Road. Not to challenge a senior bullfrog, but I come to a different conclusion. I do sympathize and recognize the importance of annual audits. They do in fact confirm the validity of the financial statements, and that's an important third-party validation. From my perspective, the interim financial statements, whether they be monthly or quarterly, are much more important than the annual statements. They're important principally because they permit the town or any enterprise to measure progress against a plan and to make whatever adjustments are necessary on a go-forward basis. It is somewhat counterintuitive to me that when I first became interested in the town's financial affairs, I made a public records request of the state's Division of Municipal Finance, and I asked them for the interim financial statements for the town for the last several years. The last one that I could locate was March of 2018. So that from my perspective, it's counterintuitive to operate for several years without interim financial statements. Well, I should be careful. I don't know that they don't exist. I know I can't locate them. But it appears to me that the town was comfortable operating for several years without interim financial statements, which to me are much more important than annual reports that validate historical numbers. So to me, the real question is, are the interim financial statements that we are now receiving basically since October as of September, are they adequate for purposes of understanding our position and our plan forward? One way of judging the adequacy of interim financial statements is to inquire of the preparer whether that person has a history of audit exceptions. Now, audit exceptions come in two varieties. One is sort of cardinal sins, booking income that doesn't exist would be an example. Another would be of the more venial variety, selecting a discount rate slightly different than the other. So it might be helpful to, in my judgment, understand whether the financial statements and the history of the preparer have extraordinary audit exceptions. My judgment is that that is not the case. So I feel that the financial statements that we are now currently receiving are adequate for purposes of moving forward. Lastly, a third conclusion or basis would be that, as you know, Standard & Poor's has recently issued a downgrade, and they will be very careful in watching the town's progress. And anything that delays that progress would be an adverse development from their perspective. Thank you for your time.
Thank you so much for your comment.
So I would just say to Vin's comments that
Pull the mic closer to Bill.
Yeah.
Sorry.
as a disclaimer for the budget committee, the only records that we have looked at are the ones that John provided in March. So when he talks about interim financial reports, we have never seen any, received any, or reviewed any of them. So our budget, their budget, our recommendations are solely based on John's numbers in the booklet that we received in March. And I've asked for when the audit's gonna be done, I've asked for financial statements, financial reports up until then, and we end up with the booklet. So just so everyone here is on the same page, That's how we're coming up with our recommendations.
And I think what Scott's alluding to is that, you know, the committee hasn't received packets of information, but I will say that, as Mr. Kennedy said, the town at town council meetings is getting regular updates from the financial director, which is the first time since 2018 that that's occurred on a monthly basis, which is significant progress. You know, I think getting the mechanics together and stuff so that the committee gets regular work. And I think Scott is correct for the committee to want and to need those types of documents delivered to us. Those are, and you can watch the town council meetings on YouTube. Mr. McNamee does provide a pretty detailed report of our current and pending balances and our cash flow.
And I think those reports are, I believe the reports are included in the packet, right?
I've had some, yes, sometimes I think more recently they have been. I think it's like in October, I watched several, you know, I've watched most of them, you know, gave a verbal report, not in the pack. And then I think as we've progressed and got more mature, like, again, I think there's just been a lot of cleanup that's been going on. So it's been really hard to kind of get everything together and get everybody's wants and needs. But I do acknowledge that I think Scott is correct that the committee would like to see more regular printed materials delivered. Yes, sir. Mr. Crowell. Didn't see him in the back. Yes. Can you please? Thank you.
George Kroll, 4 West Branch Road. The Auditor General of the State of Rhode Island, in August of every year, is required by the House and the Senate to produce a document by town, by new municipality. I've met with the Auditor General twice. The documents that he gave to the legislature. Remember last year, the council went to the Department of Revenue for an override, 4%. And they said no. Went to the Auditor General for the override. He said no. Went back to the revenue and they said no. And then it went to the legislature, to our representative and senator. And got passed, 12%. The report in August of last year, numbers provided by John. I've gotten along with John, but the numbers there said that this is before the 24 audit. His best guesstimate was we're going to be $1.7 million in the hole. Well, when he got the audit this year, we're on the plus side of $1.9 million. His projection for 25 was 2.3 million in the hole. He told the council a couple of weeks ago that we're probably going to have a couple of 100,000. Is that correct? Couple 100,000?
First of all, George, the lot in 24 was 1.1 million on the financial statements in the audit. It was not a 1.9 million surplus. 1.9 million was the accumulated surplus as of June of 24. Of that 1.9 million, the financial town meeting for the FY 25 budget had predicted we would use 1.196 million. So if you look at the balance sheet for the audit, it's going to show a committed number of 1.196, which then leaves just about 600,000 of unassigned fund balance. So saying that there's 1.9 million surplus for 24 is just wrong.
Okay, but what about 25?
25? I just submitted the trial balances today to the auditors. And right now, the general fund is looking at an $835,000 loss.
Okay, so the budget report last year, we had nothing to do roads, just road maintenance. Was not there, nothing. And we went and paved 4 roads to over $1 million. Where did the money come from? What account did it come from?
Mr. Kroll, thank you. If you can ask us the question, that's fine. And
Ask you. Do you remember last year?
if I, 1 second, if I can understand, so your I'm just trying to follow your question about the audit general report that you mentioned.
Yep.
So like you're saying there's a report, and what does that report say in it that may be of interest?
It said we would have it said we would be in 24, we'd be structurally down 1.7 million. And then in 25, 2.3 million
In the auditor general report?
in the Auditor General's report.
I have the report as of November 2025, and I can't.
This is the August report. This is the report he has to give the legislature.
Okay,
Okay?
yeah.
But okay. Last year, budget,
Mhm.
do we approve paving 4 new roads for $1 million?
So the committee has discussed this, right? And I think my other committee members too, I think we've asked some questions around how capital projects are funded and the history of capital projects in town. So capital funds are allocated yearly and budgeted yearly. They are accumulated in a capital account that is separate from the unrestricted general fund, right? So they're a restricted item. And then the town administrator puts together a capital plan. And in our budget book, bear with me. Corey, do you know what page that is?
We usually put aside 125,000 for maintenance.
Bear with me, my apologies. Yeah, in page 23 of our current budget book. This, yes, there we go. People are able to look. In page 23, you will see that we have a 5-year capital plan summary. So, the capital plan is essentially a plan, right? And we don't vote at the financial town meeting on those types of expenses. We are voting to allocate money into capital, right? So money is allocated into capital, sits in the capital account, and then projects are done out of the capital account. Now, we have asked about the paving as well, and we have asked about how capital projects are planned and executed. And I've been interested in this from a couple reasons. One is I think the reason you are raising right now, which is a transparency for the people in the town to understand how the town is funding projects and where it's spending money, so people can feel like, you know, we have a financial town meeting that votes on moving money from the cell tower to someplace in the ambulance fund. We do all kinds of little things, but we don't seem to vote on a couple important things. And so my understanding from those conversations is that the capital is allocated, and then the town council will look at the capital plan with the town administrator and make a decision about what capital plan to execute. And from my discussions with the folks here that are here over here, our town administrator, our finance director, some town council members, the paving plan, which I believe was enacted, and they'll have to correct me if I'm incorrect, so I'm just going off my memory. I think in 2024
From Beta.
is when they initially decided to do that. And our former town administrator provided them with capital numbers of accumulated paving capital numbers. You mentioned the town has a history, and I think of allocating 125,000, sometimes more, to paving in that capital plan. So at the financial town meeting, we will have a stroke, and it will be in here that will say capital.
But we didn't have $1 million.
We didn't last year. So, but we will have a stroke that says capital. It will put a certain amount of money into a capital fund. That fund is funding capital projects that are possibly on this list as a plan, but they are not in stone. The town council then looks at the needs of capital in town and uses that capital fund to pay for capital. It is from multiple years. It is,
But we didn't have that kind of money.
well, so,
We had not accumulated that kind of money.
and I think,
You know that and I know that.
yes,
Not there.
if you look at what the financial town administrator provided the town council, he showed them, I think, a $1.4 million paving fund.
Right.
Which they approved, sent for bid. And then in 2025, before we as a committee, which you were chair of at the time, realized that we had a significant structural deficit and had a significant problem with our budget book. They had approved a paving plan with Beta in a vote at the town meeting. And so the town council approved that. Now, I personally,
Town council didn't approve it. I've been through all the minutes. They never approved the paving project.
there was a vote, there was a motion and a vote to do that.
No, been through all of them and it's not there.
It is, but that's okay, George.
Okay.
Um,
Back proof.
we can get you the meeting date. So
Go through all.
now, what is it?
March 6th.
March 6th, 2025. So George, I think what you raise is to me a very important point. And I and the committee, we would like to see a change in the charter. And we spent a lot, I mean, we must have spent 10 hours talking about charter changes. And part of what we talked about was this exact topic of should the town at the financial town meeting, should the townspeople be voting on using the capital fund that's already funded, taking that fund and then and spending that money, say, for paving projects or for purchase of a fire truck or whatever it might be that it's used for? Should we have a warrant article that we come in and people in the town approve that particular expense for that? Or do the townspeople engage with the town council in their process of determining how capital is spent and come to meetings and then, pay attention to what the town council is doing? I think that's an option for discussion that the town council, the charter review commission and us, we can have. But I would dispute the fact that there wasn't a vote because there was. You were correct that there was not $1.4 million in that capital fund. The financial town administrator at the time gave the town council incorrect information because the town's books were a disaster.
Right.
Right? And so they sent out for bid and then voted to fund a paving project based on information that they had at the time that ended up not being correct. Now, I know Mr. McNamee has been very concerned about cash flow, right? And there was a time in August where they were really concerned about the amount of cash that the town had and could they pay their bills? Because our general fund had been depleted so low. And we had this project that you're referring to coming up, which had bills associated with it. And I know that he structured payments to that company in a way that preserved our cash flow. And that I also know from talking to the town council and watching their meetings that there was some discussion of, do you delay that? I think we had this discussion last year. Me and you I think we had this discussion of the paving project last year. Do we cancel part of the project and eat the cost of that? Or do we move forward? That's not our decision.
That was their decision.
That's the town council's decision. But I would say that Mr. McNamee executed that plan really well. It was a capital plan. And we have roads that definitely, I don't think people disputed the roads needed to be paved. I think people could dispute that that the information was not well resolved because of our books were in such a disaster. And our general fund had been absolutely depleted to a very dangerous level.
The thing is, I think on your recapitulation page, I think some of your revenue numbers are very inflated.
And so which revenue numbers are you talking about, George?
Beach,
Yes, I agree.
beach, I think that number's, if you can promise sunny days.
Yeah.
And I think also the ambulance reimbursement,
So
those two, I think those are very inflated.
now the ambulance reimbursement fund, I will say that our fire chief and our police chief are exceptionally good at their jobs.
Know that.
I talked to the fire chief when he was here and he said that they've been doing a lot more runs, a lot more calls than recent. And I believe that's why that number is higher.
It's a big jump.
It is, but he mentioned a number of calls. What multiplier is it? You remember?
I don't exactly.
I don't remember, but
They're doing a number of calls, like sometimes in excess of 4 per day.
They've got what he said to us is, and I've got it in our draft letter, which we'll talk about tonight, but the fire chief said that the number of calls and the fact that we're getting calls year round more, they are really thankful that they have 3 people on duty.
Just saying, we've had 140,000 there for years.
I think that's just stuck in there.
Jump is huge.
I think that
The beach from 3 to 380.
now the beach is that's a great point. So the Beach Commission, puts those numbers forward.
Right.
And last year, the beach, for the first time in a long time, ran a deficit on their expenditures because I think people in town are used to the beach basically being a revenue source for the town. And the parking lot.
Smaller.
Storms, it's smaller. They're dealing with still people on the COVID side, if there's bad weather, 3 years ago, I think it was so rocky. Last year was spectacular, but it takes a while to catch up. But they're providing a budget estimate, and we've talked to them quite a bit about what assistance they need from the town and helping them project revenue. They don't have data or things to make those estimates from, but I will tell you that the beach expenses and the revenue are handled by the Beach Commission.
Right.
They provide those numbers. If for some reason that beach revenue was less, we would, and we've talked to them about this. We specifically, when they were here, asked them about this. If they are seeing weather that's bad or attendance that's low, they have demand-based scheduling.
Right.
And so they expect their expenses to be less. And I have impressed upon them that the town is still used to the beach being a revenue source.
Done.
And that people in town need to understand that the beach is a resource of the town and not a revenue source necessarily. And we can't maybe always count on a profit or from the beach every year to go back into the general fund, which is where it's been going. But the beach definitely needs to be discussed, and there needs to be more coordination with our finance folks and the beach. But that's an area I think where town council could help the beach out quite a bit. They feel like they've been, for the last 20 years or so, kind of operating in the ether, not getting a lot of direction and not being able to use their excess revenue to fund their rainy day fund, right? That money that they have been generating, $40,000 a year in surplus, just goes into the general fund, and they don't have, say, the ability to take that fund and then build themselves a parking lot fund up, per se. That's a very large rainy day fund for that parking lot. So if something happens to it, then they would have the money, right? Which has been the concern, I think, of the committee, is that there is a significant asset sitting on that South Shore. We saw what a storm can do. Committee's very lucky we have Chris Wilkie in town that can fix our parking lot for a quarter of the price of other bids. But if we had a bad storm, there was a breach on that beach, we're talking about a several $100,000 event. And where would the money come to open the beach up, right? So people could use the beach and also the revenue could be there. We don't have a good answer for that right now, George.
Okay. The other thing, last thing is delinquent taxes.
Yes, that's a great topic.
Yeah.
And what would you like to?
I don't think there should be anything in there with delinquent taxes.
Well, I can tell you that we've inquired about this as well. There's a couple different kinds of delinquent taxes. And because I've been curious about this as well, there are people who there's like a month delay or so between the fiscal years and things that their quarterly taxes are a little bit delayed for whatever reason. And so that it technically is counted as that. And then there's the real delinquent taxes. The town had not had as you know, because we've discussed this last year, I think it had $800 and some thousand dollars.
$854,000.
$854,000 in delinquent taxes that some people had not paid their taxes in 20 years or 10 years or so, right? I know the town sent, I believe, all of the tangible taxes out for collection that were late. I believe they sent it, right? And they're going to have a tax sale, I've been told, as well. And so I think there's been significant progress on the delinquent taxes. But when John says this is his estimate and he tells us why it's an estimate, it's an estimate, right? This is estimated revenue.
Every year. Started in 20 at $80,000. It's been going up and up and up and up.
Yeah. So last year it was
Cumulative.
Yeah. Well, it was,
There.
I think it was 300 and, what was it, 300,000 last year? John, do you know
100 last year, 375 this year.
what our actuals were on that?
So if you look at the balance sheet, you're looking at somewhere close to, so at the end of 25, probably something close to 800,000.
So we estimated $300,000.
If you look at the collections, delinquent taxes in 26, we collected well over 500,000. There's a core in there of about $250,000 of hardcore delinquent taxes that we're going to be looking at for a tax sale. There are also some agreements that have been made over the years for some of these that we have to look into as well. But right now, that's really where the core is. Our collection rate is certainly well above 98% on an annual basis. So, and again, we've been sending out delinquent notices, which is not done on a regular basis. We did that this year on a regular basis, and we continue to follow up on a quarterly basis with delinquent taxes. So.
And so you based your $375,000 on what figure? I mean, you didn't just pull that out of the air.
Well, some of that is going to be, like you say, those people that missed that fourth quarter payment or for some reason they wind up delinquent. So you wind up in July, in August, picking up some of those funds as well too. So in that period, so we continually look at that. So, you know, but we do, there are some hardcore that we have to look at from, and like you said, we haven't had a tax sale, so there should be some incentive when we put that in place.
I think that's a high number.
Do you think $375,000 is an overestimate?
Very, yep.
Don,
Revenue.
do you feel like $375,000 is overestimated revenue for delinquent taxes?
Well, I've got on the other side, on the tax side, I've got a collection rate that's probably conservative, so it's going to probably wash itself out.
So you feel like you're underestimating our actual collection rate, and if you'll get probably, because you're conservative there, you'll get a little more on the collection rate on that side, which balances out I mean, how would you, we discussed this revenue stuff, and George, you know this, it's hard to come up with these numbers and figure out where those revenue sources are coming from, like fees and things like that. These are generally just revenue estimates that you're having to project, right?
Well, it's based on the levy, it's based on the collection rate, based on historical information. For example, if you look at the interest that's collected on delinquent taxes, always well above $100,000. We've got $100,000 plugged in there for the interest on the collection rate. So I'm pretty comfortable with the number overall
And would you expect, as we do a better job with our informing people of their delinquency and collecting on that tax sale, do you think over time the town should expect that number to go down on delinquent tax collection? Or where do you like, and for future revenue when people are looking at these types of things?
Well, and some of them, if you go to a tax sale, then you'll wind up obviously eliminating that ongoing. I mean, there's a few that I can think of right now that certainly will improve after a tax collection, after a tax sale. There's no question about it. So will we be down to 80,000? I don't know. You're talking about 16 million plus 16.4 in terms of total tax. So, and again, under accounting pronouncements, you have 60 days after year end they pick up that revenue in the subsequent year, and then they back out the 60 days from the prior year too. So there's some offset in terms of the revenue recognition for budgeted purposes as well. So.
Last year's was 300,000, I believe.
Yeah. Yep. I think, yeah, George, it's one of these estimates that we get the best information we can from our people, and it's in the numbers, and we'll see where it shakes out.
Just think they're high, very high. Okay, thank you.
Do we have any more comments?
Mike Rocha, Colebrook Road. My question is,
Can you make sure that you're speaking in the microphone, please?
my question would be on the homestead exemption.
Absolutely.
It, from documentation that I've seen circulating, that we have approximately about 2,672 taxable parcels in town. My understanding that there's approximately about 1,800 homes that could potentially be eligible for this homestead exemption. At 1,800 out of the 2,600 is my understanding.
Denise has told me when I called her a couple weeks ago and asked her what she had on numbers on that, she said there were about 1,450 qualified homes. But there will be more than that probably because the law automatically qualifies people under certain conditions and then other people will have to apply. So yes, there is some number of permanent residents and properties that will work, but 1,400, somewhere 1,800, something like, yes.
So if all of the eligible properties apply for the homestead exemption, what would the credit be that the town would be allowing for?
The homestead exemption as written this year will be 10% of the mean property value in town. So it's not based on how many people qualify for the homestead exemption.
So how do we know you're not going to base it, the homestead exemption is not going to be based off the amount of people that apply for it, is what you're saying?
As the law is written, the homestead exemption is this year, and it's explained in the Warren article. The homestead exemption this year, as the law is written, is 10% of the mean taxable value of residential properties in town, which Denise has given us an estimate, I believe, of the mean property value of being $1.22 million. So that would put us at $120,000. These are rough estimates, but somewhere in there per property. So my property, your property, if you qualify for the homestead exemption, your taxable value, you would see reduced by that amount, $120,000. And then the millage rate would be applied to that property. Yes.
So, okay, I was under the understanding that it was based on how many people actually applied to it.
No, so if you look at the way the math works, what changes with the number of people that apply for the credit would be the function of where what we would call the break point is. So if you have a house, and the way Denise has worked it out,
24.
on page 24, thank you so much. And then we have another estimate that there's two ways you can look at this. We're lucky to have a really great tax assessor who's very good at working with people in town. If you haven't got to meet Denise Cosgrove, she's fabulous. And she's put together this page here on 24. And then Jack Hare and Jim Locke put together, they had a committee. Trying to think who was on their committee originally. I served on the committee. Gary was on the committee, Jim and Jack. And then who else was on the committee?
Waving in the back. Oh, George.
Denise was on the committee. And then there was a committee, then they had a group before that worked on this. But so Jim and Jack put together a sheet that's on page 25 that kind of helps explain this. Now, again, I would impress upon people that numbers like the millage rate or the exact number of property value, the 10% is the law, but this number will come out from the tax assessor. So, the break point at which a resident pays less under a homestead exemption or more under a homestead exemption will change based on the number of people who qualify for the homestead exemption. But the amount that people receive is not subject to that. It's not the way the math works. So what would happen is that let's say a lot of people qualify for the homestead exemption. So what would happen is that maybe instead of a $3 million home basically being even, paying about the same amount they did with or without, that number might come down to a $2.5 million home is even, right? And so the math doesn't affect your particular exemption. it would, the amount, it would affect what the break point is. So your exemption would still be $127,000 or so off of your taxable rate. And then you apply the millage to that.
$127,000 off the evaluation.
That's correct. Off your taxable evaluation. That's correct.
So I guess there was a new paper that was circulated tonight that the rate is gonna be what with the homestead, please?
Well, again, and I would say that these are estimates, right? We won't know what that rate is until Denise finalizes it, but the proposed rate right now, I think is 4.79, the millage rate. And just, I think sometimes people, underestimate, like they kind of mistake what millage rate really means to them. As properties go up in town and, property values go up, our millage rate is going to go down, right? Just because your property value went up, but your taxes pretty much stay the same because your property tax went up, right? So, but what really impacts this too is that we've added a lot of properties in town. There's been a lot of construction of ADUs and other things, and that adds buildings and things that are taxable. So that adds property value. So that's a little different than say your property value goes up and your millage rate goes down. Now we're adding a couple $100 million, say, of new properties to town, or 100, with the property value. So that would reduce our millage rate.
Right, so what would the millage rate be without the homestead exemption?
Well, I can tell you that based on Jim's numbers here, before we got this tonight, the millage rate was going to be something in the 20 cents more with and without, right? And so it would be, I would say that's a decent number to look at. I'm not sure. Do you know the number with and without off the top of your head, John?
Denise did another calculation today. I think it was going to be around 468, right?
So
68.
11 cents.
468, no homestead, 479 with the homestead.
Correct.
No.
You guys need to get on the same page.
No, it's
an estimate.
It's an estimate, and it makes absolutely no difference in the homestead exemption amount, right? It doesn't change your credit. It doesn't change your tax bill. I think that's what you need to understand, is that the millage rate is a function of how much your property is worth, right? And the millage rate is going to change and go up and down, right? And so, yes, if my property goes way up in value or way down in value, it affects me personally. But in town, the millage rate and the property values move together. So the homestead exemption, the way it's designed, is really independent of property values, because we're using the 10% mean property value in town, not a fixed number. And because it's not a fixed number and it's a percentage, it moves with those values. And so your numbers are going to stay very consistent with those credits. The thing that will impact your particular properties, how much your taxes are more or less with the homestead exemption, is the number of people who qualify. The less people that qualify, the larger that discount will be. The more people that qualify, the less the discount would be. And so, for example, right now, a $500,000 home is expected to see around $500 less in taxes on their tax bill. Will be $500 less with a homestead exemption than it would be without a homestead exemption. Now, that could be $400 or that could be $550, depending on how many people apply and receive the homestead exemption. But the amount of credit, which is $127,000 or 10% of their value, is fixed and it will float. And so if your homes are more valuable, you're going to get a larger credit. It's going to be multiple that, but your value is multiplied by that millage rate. So I think you have to be very careful with just thinking about a millage rate as a number, because it's a number in context.
Okay, I got to go back and look at that, because I look at this and I look at this sheet, and there was a sheet that says that we were all going to get, I believe it was a $610 or $635 credit. But then you look at the examples and then it shows something different.
Well, right. I think there's I think if you look at page 24 and page 25.
This is the only page I got.
And so I think some people have the book is the book been circulated out?
They're all out.
Yeah, so the book is out there. So, Denise on page 24 shows this a little differently than I had originally conceptualized it, but I understand why she's showing it this way. She's taking $127,000 and applying a millage rate to that and saying, right, if we take that off, here's what your credit is, right? And then she applies your tax bill. And then she says, based on your tax bill, here's your percent savings on that bill. And that percent savings decreases as your property value goes up until at some point, because your property value is it's a threshold, you pay slightly more in taxes than you would if there wasn't a homestead exemption, right? So it's not an even savings across all properties. The savings is greatest at the lower property values and less at the higher property values. It's a bit of a difference from, say, some other towns have a straight percentage of all properties receive a homestead exemption of, say, 30%, right? That benefits people with very large properties much greater than people with very small properties. This homestead exemption is really the opposite of that. It benefits people who have lower valued homes over people who have much higher valued homes.
You also have the part where you're gonna be looking to charge people that are secondary homes to make up for this, correct?
The way a homestead exemption works is if you qualify for the exemption, you get an exemption off your property values. If you don't qualify, you don't get that exemption. And the net effect is that because you have to subtract out all the exempted rates, you end up with a slightly higher millage rate. So 11 cents more or so, whatever it might be, 20 cents, 11 cents more, you apply. So what ends up happening is people who do not live in town and say have a summer home here, or they rent their home as an Airbnb or something like that, right? They will pay the non-resident property tax, which doesn't have the exemption. It's the same millage rate. It's the same everything. It just doesn't have an exemption on it, right? If you rent your house, if you own a property and rent it around 12 months a year, your property qualifies for that exemption. So if someone has someone in their home 12 months a year, whether they rent it or if it's just occupied 12 months a year, they qualify for that exemption. And that's something the committee, I can't remember, I think that was Gary's idea or Jim, somebody came up with the idea of trying to make sure that we incentivize long-term, full-time rental properties. And it was really important to the committee that happened. And that's the mechanism that's written into the statute to allow that to happen.
Page 25 will show you for non-residents.
Use your microphone.
Sorry. Page 25 will show the estimates for what the non-residents will pay extra beyond.
Yeah, that's a great point. And Denise page, I think it's in green if my eyes are correct. But it says tax bill with homestead exemption. That is, you can see that right there is anyone who does not qualify. That's their tax bill. Then if you go to your right, tax bill, 2026 tax bill, blue is people who don't qualify. The green is the people that do qualify for their tax bills, right? And then all the way to the right is if it doesn't pass, what the tax bill would be.
Has this committee done an impact study on this overall plan and how this could affect us potentially in years to come?
What do you mean affect us?
How is this, as far as whether this will work or not, based on our current, on our situation, our financial situation, how we run everything in this town?
So I will say that the committee that I was on with Gary and Jim and Jack and Denise, we came to town council, presented to town council, they had a couple of hearings. It is revenue neutral. So it changes the taxable revenue in town, not one bit. It's the exact same amount of property tax levy that you get with and without a homestead exemption. It makes no difference whether you have a homestead exemption or do not to the revenue of the town. The town's revenue is exactly the same.
So did you model this after another town?
Did you what?
Model this homestead, what we're talking about, was that modeled after another town?
Another town, no. No, we looked at 10 towns homestead exemptions. And then we looked at the uniqueness of Little Compton. because Little Compton is an outlier in almost every town when it comes to property values and the number of full-time residents. We do not look like almost any other town.
So from what I understand, that you're saying that your smaller committee basically came up with this plan, not based on another town, but there was no independent impact study done for this
I don't understand what you mean by impact.
to see what this will do to us. I mean, you didn't put another set of eyes on the plan that you are presenting to us right now. That's what
No, I think that the committee put it together, the town council approved it, the state legislator looked at it and voted and unanimously approved it. What else would you look for there?
well, you always put a second set of eyes on everything to see if people look at things from different points of view.
Oh, I think,
Seems like 3 sets.
I think we had 3 set, plus we had the public at 2 different public hearings discussing it. I mean, the committee, also did not operate in a vacuum. I know that many members of the committee spoke to a lot of people and talked to people in town about and thought about this from different perspectives. But to suggest that somehow there wasn't a quote unquote impact study or that there wasn't a second set of eyes, there were lots of eyes on this from lots of different perspectives. And I think that now the question is before the financial town meeting of whether the townspeople, which is another set of eyes, wishes to have this or not. That's the question before the financial town meeting.
So our current budget right now is, it doesn't make a difference whether it's a homestead or not a homestead. What you're telling us is that it covers all of our expenses going forward.
That is correct.
So again, it doesn't change. Is raised.
Right.
Changes who pays it. Right? So with the homes, it just paying whose tax bill is
Yeah,
bigger.
and it's a,
Bottom line is the same. You raise the same amount of money.
it's a small, I mean, we're not cutting people's tax bill in half, right? It's reducing somebody's tax bill by 25% if they have a very small home, maybe 10 or 15%, but it's meaningful.
But I think what maybe Mike's trying to allude to is that you say we give $1 million in credits to the residents. You're gonna do $1 million debit to the non-residents to offset it, so there's no tax difference. But by impact, I haven't heard one discussion tonight about how the non-residents are gonna feel about it. So if you have other communities that have done something like this, what did the non-residents think about it? Did they sell? My feeling is that once they get a new bill, tax bill higher, they might be more apt to do Airbnbs to offset these taxes.
But
So-
Airbnbs aren't part of the tax.
No, I think
But if I'm a non-resident
Yeah.
and my tax bill goes up by, take another
Oh, I.
iteration here. It's 10% the first year. It can be 15% the following year. Then it can be 15% every year. So if I'm a non-resident and every year I get hit with a 15% increase, how am I gonna feel about that?
Well,
And what can I do about that? And is that gonna make me more apt to rent my house out as an Airbnb during the summer, which then creates more problems for the neighbors? So by impact, I wasn't looking at it from a financial point of view. It's what's the impact gonna be non-financial, because it's an offset, right? I'm gonna get a credit, somebody else is gonna pay.
yeah, so I think the committee that I was on, not this committee, but the committee that I was on discussed this type of thing quite a bit. And again, that's one of the reasons I think that, and I can't remember who came up with the idea to bracket it so that you cannot have some type of large change at one financial town meeting. It's bracketed. And I'm sorry, I just can't remember whose idea, but it was really, I think, an idea of stability so that people know what to expect. And I think one of the benefits that people who do have summer homes in Little Compton have is that their tax bill for Little Compton is a third of, say, other towns. And so we're not talking about a large change in someone's tax bill. What we're talking about is a small change across people's tax bill, but it is moving that. And it makes a small difference, 10%, 15%, 25% at the smaller home value area to people in a way that is meaningful. And it is a philosophical discussion, I think, whether that is something people want to have or not have. But mathematically, it doesn't impact the town's budget. But I think Scott raises a good point in that, you know, how it's a difficult population of people to survey because they don't come to town council meetings and they don't come to these types of meetings very often. Occasionally I'll see, you know, when I'm at town council, you'll see somebody show up for when I think the short-term rental ordinance, we had some out-of-town people who own short-term rentals come, but you know, it's a question open for the financial town meeting. Again, I think the way this was structured was committee reviewed it, came up with suggestions, town council passed, had a couple public hearings, passed it, went to the legislature passed it, and it was designed to have a vote at the financial town meeting so that people would have a voice in it. So it wasn't just something that came out of the town council. And I thought that was a very, very good design that was come.
Let me just, if I could just piggyback on what Scott just said about the $1 million credit, and then you got to debit the $1 million. As you know, come July 1, there's going to be the new millionaire's tax in the state of Rhode Island. So somebody that's here in town that has a $2 million home, they're going to end up getting whacked another $5,000 on top of.
No, that's not actually correct.
Well, they're going to get a $1 million.
It's $5. It's the math doesn't work. It's not on the entire property.
No, you get the first $1 million is exempt. So a $2 million property, you get 1 million of that exempt, then you get charged for the second $1 million. It comes out to $5,000. On a $3 million home, it comes out to $11,000. So what I'd like to know is from the committee standpoint, has the committee taken into consideration? So if I was an out-of-town resident and I had a summer home here and I said to myself, hey, I'm gonna get charged an extra $5,000 in taxes on top of my town taxes every year. Why don't I just change my residency to Little Compton? I save $5,000. Now that $5,000 a year that person, well, I'm sorry, that $5,000 would be paying to the state, not to the town. As part of their millionaire tax. So if they said, I'm gonna become a resident of Little Compton, I'm gonna save my $5,000. That extra money that you would have been charging that person because they would have been part of the group that was supplementing the credits, we're gonna lose that money that's being offset on the.
Yeah, so what would end up happening in that case would be that the break-even point or that break point would slide down as more people qualify for the homestead exemption. But it does not change the total tax levy because that number is independent of anything. So it would bring down the break-even point.
No matter what you look at it, you're gonna have credits and you have to offset the credits.
Yeah.
You don't have enough people to offset the credits. Right? If more people say, you know something, I'm gonna become a resident of Little Compton because I don't want to pay that extra tax to the state. How is that gonna be handled?
Well, the system automatically recalculates. So what would end up happening is that your homestead exemption, right, then the break point, right, that where the property value is either getting is slightly less or slightly more than the year before, with or without an exemption, would just slide down. That's all that would happen. No work is really required to deal with that. It's just that the number of homes that would qualify would increase. It's not dependent on a particular event to happen and all of a sudden you don't have the revenue. That's not how that works. It's
When you have more homes that qualify, that means that they're getting more credits, correct?
no,
They're not.
it's not based that way because it's not a credit. And I think that's something that people have to understand. It's a deduction off of your taxable values. Because it's a deduction off of your taxable values, you end up with a slightly higher millage rate for everyone. And so if you get the homestead exemption, right, you take a percentage off of your total home value and you apply the millage rate. If you don't get the homestead exemption, you apply the millage rate. So there is no no one's given a credit to someone and then having to get a credit from someone else. It's just the millage rate is applied to your property. The only question is does your property have an exemption on it or not? That's the only question.
And in an extreme case, if you think about it this way, if everybody in town decided, I don't want to pay this, I'm going to declare residency in Little Compton, then this exemption would be worth nothing, right? It wouldn't matter.
That's what I'm wondering.
Cost people anymore either.
Wouldn't cost them anymore. We'd all just divide how we pay the tax collection differently, right?
It literally would not, that break even, it would literally slide down to where it would have a null effect of if you didn't have an exemption or did have an exemption, it would all be the same. So
Very similar to what we have right now, right?
Correct.
yeah,
I guess,
But that's an extreme case, right? Everybody that lives in this town is not going to decide
that would be
to
amazing.
declare their residency.
I think it would be amazing if we had a town of 2,500 permanent residents. This town would be popping. We would have restaurants and it would be amazing to have a town with 2,500. Yes, sir.
Yeah, just one question.
Up to the microphone, Pete, you're on
I'm sorry,
TV.
you're on, yeah.
On TV, it doesn't matter. It
Yeah.
doesn't matter. Nobody can hear you on TV.
Yeah.
Want me to get you a stool? Ow.
Oh.
Salman, we'll see again. We're gonna have all this in the town hall. Who's gonna do all this paperwork?
That's a great question, and the committee grappled with this intensely. We've set the system up to where people automatically qualify. Very, very few people will have to actually come in and do any application at all. So Sal, as long as you are a registered voter, right, you qualify. We've set this up so it is a low administrative burden. We have thought about that because to us, that was very, very important. Jim Locke would like to come up as well.
Stay over there.
Can't stay over there. You got to share the microphone.
Might not realize that all these people know each other so well, so.
Is that the best time?
Raise the microphone.
So my name is Jim Locke.
Raise the microphone so you can talk loudly.
I've spent some time working on this, and this is a complicated problem. And a lot of questions and good questions have been asked. And what I'd like to do is have somebody put the sheet that Jack Hare and I put together, because in order for people to understand the issues, they need to understand the process by which this occurred. So can you do that for me, John?
Can do that.
It isn't really so much the numbers at the end of the day. So let's go through this in a structured fashion. This year, the total property tax revenue is $15.6 million approximately. And all of these numbers are estimates, and they're all going to change sometime at the end of May or in June. Although I don't think they're going to change more than 2 or 3%. Second of all, next year's property tax value will increase by 4%, $16.2 million. So those two numbers are a little bit etched in stone. Something very important happened this year. Thank goodness to Denise and others. The total assessed property values in this town have increased by $140 million from 3.26 billion to 3.40. That's very important, because if the total property that's assessed in town goes up, the millage rate necessary to generate $16.2 million goes down. Okay, so the millage rate has gone down, and it may actually gone down. My numbers, according to what Denise has produced, is not quite right, but it's close. The status quo would state that if the homestead exemption is not passed, the rate needed to generate $16.2 million is 4.76. Now Denise's new numbers are what, 4.68?
Yep.
Something like that. So the numbers are going to be off by 1 or 2%, depending on exactly how much the property values change. So that would be 4.76 for all 2,672 tax parcels. If the homestead exemption passes, the millage rate, as Mike pointed out, has to go up. In order for the revenue of the town to stay even, if we're going to provide a tax benefit to some residents in town, the millage rate has to go up. So if it's passed, the millage rate will go up from 4.76 to 4.95. You're probably going to tell me it's going to be 4.90 or something like that.
I'm gonna tell you, it's gonna be the same, 4.79.
No, if
Calculation.
is it going to be 4.79? Anyhow,
But
so the millage rate has to go up for the revenue of the town to stay the same. Now, as Andy just pointed out, the vast majority of people who qualify for the homestead exemption will be collected from the tax rates. Everybody who is a taxpayer in this town is automatically qualified to be a homestead exemption. First of all, you don't have to apply. And second of all, the number of people who qualify for the homestead exemption mostly already determined by the tax rate.
Jim, it's the voter record.
I'm sorry, the voter reg. Voter registration determines of everybody that's a tax rate. There will be some people who will apply who aren't voters, who can show that they're taxpayers and full-time residents. But that number we think is going to be very small. Under that circumstance, then, if the millage rate goes up, the assessed value of the town will go down by the assessed value of the home used for tax purposes only will drop by $127,000, which means that everybody in town will get $630 off of what they would have gotten. But if you go to the next page, they won't get $630 because their tax bill will go up somewhat based on the fact that there's an increase in the millage rate to keep the amount of revenue in the town equal. So if you go to the next page, if somebody has $300,000 of assessed value, they don't get $630, they get $575 back. And that $570, the difference between the $630 and the $575 is to make sure that the town revenue is stayed constant. So that's the basic structure for how this works. And to Andy's point, Gary is the person who insisted that we apply this tax break to full-time renters. Money doesn't go to the renter, the money goes to the landlord.
And that was to keep it so that they weren't turning them into short-term.
Yeah, I think
They would keep it so that person would be in town on a yearly basis. And
we
not
felt,
turn it-
we felt like, I think at the committee, when this was brought up, we felt like it was a substantial idea because it benefits people who are renting their homes year round. It makes sure that they get the same benefit as if they lived in that home.
So Mike Rocha asked, is anybody else say doing this? And the answer is no. There are two forms of homestead exemptions in this state. One is a straight percentage on the value of the house, which of course, as Andy pointed out, will give the largest tax benefit to the people who own the most expensive houses. The second way that it's done is in Central Falls, in Socket, and somewhere else, where they give a straight dollar amount, okay? And the problem with that plan is that if you give a straight dollar amount, if you give $500 off, as property values go up, that number has to change, it becomes irrelevant. So the plan that this plan does not require us to go back to the state legislature to increase the dollar amount of the tax breaks for full-time residents. Now, all of these numbers are going to change. That's why I put estimates in red everywhere you can see. And the only thing we know for a fact is that these numbers are going to change, but they're not going to change by more than 2%, I don't think. Anybody have any questions?
Jim's meeting. Thank you, Jim. Okay, do we have any more comments? Oh, is this an auction? Are we going once here with no comments? How do we get people to come up and give a comment? All right, hearing none, I think we'll close the public hearing then. If anyone has no comments, we'll close the public hearing. I want to thank everybody for coming. This is a great attendance, by the way. Not as good as last year, but that was different. But I do appreciate people's attendance, and I really appreciate those of you who've been coming to our budget committee meetings. And I would encourage you to talk to your friends and neighbors and people in town and ask them to please come to the financial town meeting and be part of the process. And so we'll close the public hearing. Thank you so much. Agenda.
Oh, thank you.
I'm just going to give people a minute or two to kind of get settled, and then we'll go through with our meeting.
I'll stay. We're good. It makes a good valid point in a couple of things, but I also just am annoyed that someone who
It's just,
he makes a couple really good points. He does. But he's gonna go after. Yeah, that's fine. That's fine.
This me up.
Set on this committee, like, but he makes, I mean, a couple of his points are metal roof. Spectacular. And then you don't have any maintenance.
I redid it and that was expensive. I didn't realize they took up down every video.
I hear there.
And I'm sorry, I should, I used to help him take it down every winter and put it back up, because it's like a three.
That was very smart. That was very smart. David didn't know that either.
Yeah.
The little thing that goes in the middle, that just blew off in the storm. Yeah, they did set up though. I mean, they really knew what they were doing.
Have a good night. Same. Oh,
You've already taken it.
Could you give, some kind of.
I would do a 10. I would do a 10.
Yes.
Oh, that's
If you're looking at the draft minutes from,
appreciate it.
sure you read,
I don't have them.
I don't know.
I left work late.
come sit here and read this.
If I can sit by you, Mike, it's cold.
I've got the mic off, but you're mentioned and I'm not sure that it's correct.
What?
No, you're mentioned, you just, shit.
You're gonna have increases in that budget.
Okay, you're on.
All right, everybody. Thank you. Thank you very much.
Hello. Thank you very much, folks.
Thank you.
Flower repair.
Just gonna kick Sal out.
Okay.
Thank you for coming. All right, so we'll go to item number 7, review and vote to approve minutes from 4/21/2026. Scott, you were not here, but you were eligible to vote if you wish. Does anybody have any comments or corrections on the minutes?
No,
I'd like the motion on the accept. So moved. Do I have a second?
second.
For a second, oh,
Let's do it.
Jennifer,
Aye.
all right, any comments? Corrections? Hearing none, all those in favor?
Aye.
Abstain?
Yeah, I'll abstain.
Noes?
What's in here? I mean,
Yeah. So we have Scott abstain, yeah. Okay. Item number 8, discuss and vote on warrant items and budget articles. Can I get a consensus on how the committee would like to proceed on our items? Do we want to block these and vote on them? Do we want to go by one again?
I don't object to doing a block.
All right, but let's, Scott, you were not
I don't-
here, so I would like you to have as much voice as you possibly feel that you.
so I don't have a problem with the block. The only thing that I would like to discuss is 58, which is IT. And the only reason for that is because it was supposed to meet, right? We never met.
Yeah, well, we're lucky he's here now.
Well, that's when I saw him tonight. I think it would be a great opportunity
Hey, I think,
a nice opportunity to have a discussion.
I think it's a great idea. So is that the only one you wish to pull out?
That is correct.
Okay, is that the?
Should we pull 3, considering that we voted in the negative?
Yes, I think we pulled 3 out because I'd like to offer an amendment, talk about an amendment to 3 at the financial town meeting. To make that more, and we have, luckily we have town, at least we have Bob still here and is Pat still, oh, they're still here. Yep, they're over there. So we're gonna pull number 3. We voted at preliminarily at the last meeting. We're gonna pull it out. Discuss it again. 58. And 3, anything else? Okay, so can I get a motion to pull those out and to block the rest?
Make a motion to pull those 2 out.
Mrs. Scott made a motion to pull 3 and 58 out. And a second from Corey. All those in favor?
Aye.
Okay, would you want to discuss those first? You want to dispatch the other ones first? What would your
We
preference?
dispatch the other ones and
Motion to, how do you want to, this motion to approve all the items except for the ones we pulled out, 3 and 58?
Second.
Second, I need a motion.
So moved.
Okay,
Oh,
Now
Jennifer.
you can second
thank
it.
you.
Second.
Any discussion? The committee went through these one by one in our last meeting, so everybody's aware that we're not just randomly like improving.
Well, I'll just.
Saving you.
For the homestead, that I'm gonna vote in favor of it because I think it's gonna help some of the individuals in this town that need help on their property tax.
Yeah,
But I see problems later on that we can deal with, but I think right away, there'll be some people that have houses that aren't valued under $500,000, that'll get a great discount on their property taxes, the senior citizens and other people in this town. So I think
it is specifically designed for that population, Scott, and thank you for that. Any other discussion? All those in favor?
Aye.
Opposed? Unanimous. Thank you. Okay, so which one do you want to tackle first, 58 or 3?
3.
Ooh. Okay, we're gonna work from hardest to least hard.
I was gonna say 58.
We have our IT person here now. and
58
well,
probably.
let's do.
Guys asked, I gave it to him.
So we put 58 out. To no fault of anyone, we've been wanting to ask a few questions, to the IT director, and just had trouble scheduling and whatnot.
It's 21.
21, thank you. source the generating revenue and sell signals for people to be able to use their phones, and we're getting revenue for it.
Right.
That source is accumulating money over time, and it sits in the cell tower reserve fund, right? Or cell tower fund, or whatever you want to call it.
Cell tower
The
fund.
cell tower fund. Then there's this thing called 512, which I'm just going to call it that because it makes a little bit more sense to me to call it by that number. That is essentially a nebulous thing that is there, but not there at the same time, right? It's zeroed out unless someone says we need to exercise it. Then they go get some money from the cell tower bucket and they put it in the reserve fund bucket, and then they use it for that purpose.
Right.
And then it stipulates in Article 3 that then they have to pay it back the next year.
That's right.
Okay.
And so that limits to some extent, the council would look at, and again, I can't even cite a case in which we needed to use this, but the council would look at the revenue that we got last year from the cell tower and say, well, it brought in X and we want to use 0.9X. So yes, we are confident it will be replenished next year and the reserve fund will be restored.
So it could be replenished by the cell tower revenue the next year. So,
Not paid back.
well, but it's the same, yeah, so,
Oh, it would be moved out of the cell tower fund into the reserve fund
yeah.
and then expended for whatever reason. And the question was, how do we assure that whatever it was we used gets restored? It doesn't get put back into the reserve fund because we've satisfied the need for that. So it goes into the cell tower.
So the cell tower fund has about $280,000 in it right now.
Okay.
And there is no and so I think in 2005, when the cell tower fund maybe was in its infancy, you could say moving money in and out makes sense. But let me ask you this question. Let's say we have some type of terrible storm down at the beach, and we have $150,000 worth of damage to the beach. Do you feel that a $280,000 cell phone account, which is essentially built up over time, should be accessed for something that's an emergency expense to allow the town to fix it, right? When that happens, without having to have another financial town meeting, fix it. Now, the question then is, the next year, do you need to put the money back into the account that you spent, which is what it says, $150,000?
Well, I realize it sounds like I'm watch both hands because one of them actually will leave. But there's a sense in which the way the wording says, the council may authorize borrowing from the reserve fund in anticipation of taxes in order to cover, provided, however, such borrowing should be repaid by the fund at the latest by appropriation at the next financial town meeting. And to my knowledge, and Mr. Anderson has been watching this longer than I, but he can probably shed some light on it. But I don't believe that we have had a circumstance in which we needed the following year to reimburse the cell tower.
But I know, I realize we haven't, but what I'm saying is that given that we don't have a lot of liquid money
Yes.
in the town, I don't think that we could, if we wanted to, in that scenario, say $150,000 emergency expense, the town wouldn't be capable of refunding it the next year. It would be not possible for the town to put that money back in. It would be because the town literally doesn't have the room in its budget to do that because, right? And so you have this $280,000 that next year will be 320. The next year will be 40,000 more. It's like, it goes up every year. Right?
Why is it doing that? Why is
It's never used for anything. It's sitting there accumulating.
not the debt that's owed, the amount that's
The
there?
amount that there is going up every year, right? And
Why is that then a problem?
well, it's a great thing if it's a rainy day fund and you have an emergency and you can tap it on this rare occasion that you have an emergency and you always have you have revenue coming in and filling a rainy day fund. And then you have this rainy day fund that gets bigger and it helps. I think that's a spectacular idea. My only conundrum with the thing is that if you need to tap it for a true emergency, you basically use it, borrow against it, and then have to fill it back up the next year. Not say that this was an emergency if one time every 10 years this happens, and we're going to let it build back up over time, knowing that, right, that was an emergency. My concern is that I would think that we could set this stroke up for this warrant article to essentially allow the use of it for emergencies that could be with maybe, like, you could let the account accumulate forward again. The question is do you put the burden on the taxpayers the future year to pay it all back? If it's because to me, we're not dealing with a $10,000 or $50,000 possibility here. We're dealing with, if you had a gigantic storm and you need to fix the beach, or if, I don't know, something happened in the police or fire and they needed a piece of equipment, we need to just buy it for them, right? It's a capital piece of equipment.
Right.
And they aren't going to need it again because we bought it for them. So they got their new truck instead of 2 years from now, they had to have it because it broke, and we used that money for it. Do you expect then the next year us to put into the budget, fill in the reserve fund, I mean, the cell tower fund back to $280,000, right? And then basically taxing people to put that money back into that account when it's a revenue generating account? That's my conundrum with Article 3. It's not that I think having a rainy day fund that is built up $40,000 a year is a spectacular idea. And I think that because especially now that the town has so little liquid cash, you know, and we don't have, the beach does not have, for example, has never built up that rainy day fund for that possible event that at some point will likely happen, right? And so they have no ability to say, tap a fund that is perpetually slowly building for the sole purpose of fixing the parking lot. Or I just see it as, if there is an emergency need in town, can we use it in a way that doesn't permanently deplete the fund and then let it slowly build up again? So it is a rainy day fund. So that people are like, wow, that was a bad event, but I'm glad we had that savings account to fix that. I don't have to think about that anymore. That event is in the history, right? Not, gosh, we have to think about it again next year because we got to pay that bill.
Right, I understand in the type of case that you're speaking of where I've now depleted the entire corpus of whatever it was my emergency fund. And now I don't have one anymore, so I really need to refund it. And I look at my cell tower revenue and say, I'm not going to be able to do it simply by dribbling that in. I don't, without real, current numbers, I don't know if there's a quick answer to that question. Perhaps the budget committee's endorsement or action on this stroke could be to express that in a manner that says, whatever you decide you want to do with your recommendation, let's say you decide we recommend that this be put before the people but we're going to stop short of recommending it because we want to insist the following kind of wording that ensures it's refunded.
And that would be my proposal tonight, is that we don't recommend it, but we offer an amendment to it at the financial town meeting that is structured in a way that does not authorize just the expense of this account because it's got money in it, but authorize it to be used as a rainy day fund if something was to happen, and not burden it's the way I look at my savings account at home, that our emergency fund at home, that if something was to happen, we would definitely want to continue to put money back in that account over time.
Yes.
We wouldn't want to have to go do it in 1 year, because the reason we built it up slowly in town over time was to deal with that traumatic event that happens and you just get past it.
In anticipation of this, it occurred to me also, we are undergoing a charter review process right now. We could rewrite this article to embed that within it. That doesn't obviously solve it in time to get it in.
No, but my thought is that we do both, because the Charter Review Commission, two of us are on the Charter Review Commission. We've struggled with this thing a lot.
Okay.
Trying to figure out what 512 is, what its purpose is, what the language between reserve, capital, it's just been difficult. And I appreciate that you actually were here when it got started so that we can understand it, because I think that context, I think Bonnie and Leslie and
All of us.
all of our other members really need to hear that context of the charter review. Be very helpful.
It's fair to say that this article appeared in the budget for the first time because of the fact that the charter requirement was not specific in that area. And so we happened to, not happened upon, we seized upon the cell tower revenue as being, there's our source.
Yeah.
And I acknowledge that were it to be applied to a problem that's a whole lot bigger than 1 year's cell tower revenue, that doesn't allow replenishment in the following fiscal year.
What is the advantage of having the cell tower revenue be separate? Why doesn't it just go directly into this fund?
Sorry, the question was posed to the.
Well, no, I mean, that's the struggle that, Bob, we have no answer to that question. Our thought is why don't we just consult, it appears, by the way, in the accounting records, they have been consolidated.
Yes,
Right.
I acknowledge that.
Yeah,
Yes.
so
Vote for me.
You got it.
I'll be right back.
Again, it was opportunistic, certainly on my part, because we were in this is the next round of cell tower discussions. We didn't want the first cell tower you proposed. Actually, the council had changed in the interim, and so there was different personnel involved. So we decided that we would take an approach that says, let's anticipate that problem and say, why do we need a cell tower? We think we need a cell tower for a whole lot of reasons. Some of you think that it's simply what everybody else is doing and ought not to be a focus of ours. We're willing to say we think of it important enough that we'll put in place a process. And so we put the stroke in the next year's warrant, and it's been there ever since. And once in a while, a budget committee or someone will say, what? Why did we do it this way? And I acknowledge we could go back and dress it up.
well, and I will also state that when I moved here in 2008, we drove around looking for the rental property we ended up renting, and there was no cell phone service for us. It was one of the most enjoyable 2-hour adventures I've ever had in my entire life because the roads here were not labeled. We had a blast, and the person we rented from was horrified. And I said, no, you don't understand. This has been great.
This is great.
This has been spectacular. Right? And so it is nice to actually have, it depends on who you have service with, whether you get it from here or over there, but it's been, that cell tower is actually a spectacular town resource.
Well, and the church steeple was part of the problem because they were their service provider, who at the time, I don't. Yeah, but I mean, it was whoever it was then, but
yeah,
they were providing great service. Verizon, I think, was perhaps the first on the tower at the transfer station, and they were coming in second. So every time we make another turn in the process, it would pose another problem. So I would be grateful if the committee were to find a way to include it, but if there are constraints on it, I don't see any problem at all on that.
Larry.
So I'll take as a compliment Bob's reference to my historical memory, if we want to put it that way, about past events. But so I have attended. I see the club is all here of those who have attended virtually all the meetings when either the Budget Committee or the Charter Review Commission has discussed this issue. Without a clear understanding of what is involved. And but I am concerned when I came away from your previous meeting, when you voted to recommend to reject Article 3, I put my town moderator's hat on and asked myself, what does that mean procedurally at the meeting? What was it you were trying to achieve by proposing to reject this article, which sort of echoes Bob's concern? Is that what your intent was? I will just sort of add to Bob's history. When I look back at this, and part of my historical memory depends on the fact that I have an extensive archive, including all the Budget Committee reports for the last 40 years. So I worked back. So this charter section 512 I also was at all the original Charter Commission meetings in 1994, so I was there for those. This language was in the original charter numbered 511. In 2000, it was amended because they added a new section 512, so this became 512. So this has been in the charter since 1994. To Bob's point, I don't find it appearing in the warrant until 2009, which was within a couple of years after the cell tower that we have was approved, which was approved at a special town meeting just for that purpose late in the year. So the revenues didn't come in for a while. So the provision was there all the time in the charter, and the council implemented it for the first time in 2009. So what, 14 or 15 years after we have the charter, and it's been there ever since. But I've read this over and over again, and the current language has so many conditions for different scenarios, almost every one of which involves financial town meeting approval. I mean, not just the amount that goes in, which was you're authorizing here, but how it can be used entitles the town meeting to put limits on those uses. And then the distinction between the emergency uses and the capital uses, there are different conditions all along. And just listening to John at the last meeting, there was still confusion about a cell tower fund and a special and the reserve fund, where the money was going. And I'll just make one more. Well, anyway, so my concern was in terms of the procedure at town meeting, what you can do, you can propose to the voters that they simply reject it, say vote no on the article, because the article is worded to authorize the reserve fund to receive up to $100,000. It doesn't say $70,000. It says up to $100,000. That's a little. I guess does that mean 100,000? If it's $20,000. Anyway, that's a somewhat nebulous thing. So the article is a positive authorization. So in effect, if you're saying reject, you're saying you're going to advise the voters to vote no on this article. The other options that I've contemplated were that you could move to table it, which at town meeting means that unless a tabled motion is brought back by the end of that meeting, it expires at the end of the meeting. So it's effectively rejecting it. And it expires. It doesn't come back at next year's town meeting. It's another motion you can make. Or, and I don't want to get in the business of proposing amendments, or as you suggested, it may be in order to amend this article. My only concern is that the reserve fund is a specifically authorized fund in the charter. And I think we need to ask the solicitor whether it's legally appropriate to create another fund not called, that doesn't invoke the reserve fund language at town meeting.
My thought is that if there was such an emergency and you needed to use this money, and then do you have to have a special financial town meeting for such emergency? And if you did, you could just authorize the use of the cell tower fund for that emergency without even mentioning 512. 512 could be silent, and you could use the cell phone reserve, the cell phone tower fund. The cell phone tower fund is a fund that has $280,000 in it. It is not 512. Those are separate things. The cell phone tower account is its own account. That's a revenue. It has revenue coming into it. 512 is an account with nothing in it that you can take from the cell phone tower and place into 512, but then has all of those restrictions and contingencies associated with it. And then they can be expended.
Well, the current article specifically cites section 512.
No, it's saying that you can take money from the cell tower fund, move it into 512, and then be used, right? But it has all these restrictions associated with it, right? Of how it can be used. It has to be paid back the next year.
to authorize the reserve fund to receive up to $100,000 from the accumulated I think that would be important. Then you're simply,
Getting around the restrictions.
it's simply, this is a separate appropriation of a source of funds for purposes tuition.
It would, yeah, my point would, be we wouldn't appropriate the expense of it. You would allow the expense of it in an emergency situation. You would allow the use of that accumulated surplus to be used for that emergencies without the requirement for the taxpayers to pay it all back the next year, right?
You've added, you're adding a condition, you're adding conditions that are in 512. So I guess problem, this is cites 512. I think you need to consider what you're saying, a dedication of cell phone tower revenues. You will define that doesn't mention 512. That would be an amendment that you might consider. The other complication I wondered about though is that your capitulation estimated revenue already
That's the revenue. He's booking the revenue coming, and the reason he's doing that, the revenue comes into town and it goes into that dedicated account for it. It's booked revenue. Okay. So you have to book all of your revenue and you have to book all of your expenses. You can't just mysteriously have non-booked revenue. So he's booking the revenue. There is no expense out of that account, right? And so if you did expend that account, right, you've got an accumulated surplus of $280,000 sitting in that account. You're not dependent on the revenue of $43,000 for it. Now, what you are going to impact if you did use some of that money is you're going to impact the balance of our free cash reserves, right? And so it would have an impact down. My point is that, I mean, I think we could almost just extinguish Article 3 completely. And if there was an emergency in town, we could call a special financial town meeting and authorize the expense of it for that particular purpose at that particular time, because almost all of this probably be expenditures could be so much, $50,000, maybe it doesn't matter that you do that, right? But if it's a real event that has a real expense to it, you probably have to get some kind of appropriation done for that. I'm not sure if you can just pay it out of an emergency account or not, but that's kind of my thought, is either we just get rid of it or we change it to eliminate 512 out of it and allow it to be an emergency that is declared by the town council with a couple public hearings and a vote, and not require a special financial town meeting, so they have some flexibility. But
Okay, so let's be clear. So if you reject number 3, the cell tower fund is just going to keep growing and it's not going to be appropriated in any way unless you make an amendment that says you can tap it under extraordinary circumstances. Right?
Right. And it still doesn't mean it's going to be expended that year. It's just going to keep growing. But yes, Mr. Kennedy has his hand up.
And I just want to make my point about my own confusion about which you attempted to explain to me and I didn't digest it, about the existence of a separate cell tower fund, separate from the reserve fund. I still don't get it.
Yes, there is a general ledger in the account that where money, when it comes in from the cell tower, gets deposited into that restricted account. It's a it cannot be used
Mike, that's my question. Why can't it be used?
because the way the account is set up, it goes into there is no mechanism to access that except for that warrant article that you were talking about right there in your hand number 3. That's the only mechanism for it to be touched, then it has to be put back in.
It's the reserve fund.
No, it's not.
Oh,
I don't.
No, it's dangerous, Larry. You don't want to, we've spent months.
It's not the reserve fund, but the question is, why, and actually, I would like to ask you, because you have a lot of knowledge about this. What is like I said already, is there any advantage to having these separate? And I think the answer is 512 has too many stipulations.
512 is a zeroed out account that allows, it's a bucket for you to put money in and then to use. And the way Article 3 does, it tells you where that money is going to come from and then use under those restrictions. But that's the point of 512.
Right, but it has many stipulations.
Not a bad thing, but the question is we have this $280,000 cell phone account, and do we require the tax? If there was an emergency, do you require people to pay it all back in the next fiscal year? You definitely want to let that accumulate back over time. You don't want to just strip it out and deficit spend on it. But yes, Mr. Kennedy.
Section 512 of the charter has restrictions on it. One is in borrowings. Well, first of all, there's in 2020 and 2021, there were in fact 2 accounts, one called the cell tower fund and one called the reserve fund. And you could see the funds moving back and forth. In 2022, an account which I believe to be the successor of both accounts was created and is titled and remains titled today, the Cell Tower Reserve Fund. So that is the title of the single account.
Okay.
It is accurate to say that the receipts of the cell tower lease revenues are received into that account, and there are a couple $1,000s of miscellaneous expenses that are charged against it. But the bulk of it has now accumulated to something about $280,000. Historically, there was a provision that said that the reserve account could draw up to $100,000 from the cell tower account, subject to 3 conditions or use of proceeds restrictions. One was borrowings in anticipation of taxes. One was to fund budget shortfalls occasioned by emergency conditions. And the third was for construction. And the fourth condition was for no other purpose. There was a further limitation that any amount drawn and paid into the reserve account was to be repaid the following year back into the cell tower fund. I think that is needlessly complex, and it burdens, I believe, the taxpayer to the extent that money is drawn from whatever we call this thing called the cell tower fund. Question, are the conditions of 512 attached to this new account? I would argue not, which then suggests that 512 should be eliminated on its face, just completely eliminated. I think then that raises the 2 questions. What is the relationship between the cell tower reserve fund and what are the permitted uses of that fund and the contingency line item in the budget? And I think that from an economic point of view, not from an accounting point of view, but from an economic point of view, what used to be called the town council contingency, and I think it's 180,000 in this year's budget, is what is the priority in terms of which fund do you draw from for what purpose? Because drawing from I will refer to generically as the town council contingency, and it's not a fund, it's an expense line item. That impacts the taxpayers. A drawdown cell tower fund does not, particularly if it is not restricted as to use or a required reimbursement. So I would challenge the committee to, when making your amendment, and I recommend that, I agree that there should, number one, there should be a complete elimination of 512, because I think it's not relevant anymore. There is a question as to what are the legitimate proceeds restrictions to the now accumulated 280,000 cell tower reserve fund. And what is the priority distribution as between the contingency expense and the cell tower fund? Because you could come to radically different impacts to the taxpayer depending upon which pocket you draw that from. If there is a storm, do you draw it from the contingency fund? Could you? There's no restriction as to, or do you draw it from the cell tower fund? And whatever that draw is, will impact the taxpayer differently.
Yeah, and I think that's to me, some of these questions I think are, if there's that level of expense where you need that decision.
The impact happens from $1.
Yeah, no, I recognize that. So, but you could, I'm thinking about this from a larger expense purpose. Say, but if we offer an amendment to section 3 to basically take the 512 language out of it, to authorize the town council under emergencies to draw from the cell tower fund to cover unanticipated emergencies.
And how does that distinguish from a draw on the contingency?
Contingency fund is funds that are budgeted every year for unknown expenses they may.
Including a snowstorm.
Yep, unknown expenses. It's budgeted every year.
Plus, I think there's been a long track record of the council using its contingency fund, whereas with the cell.
I'm not sure that was a knowing decision.
Yeah.
I'm sorry?
Knowing decision?
A conscious in the sense of, I just don't know because the monies have been accumulating over what appears to be long periods of time.
I believe the budget.
I'm not arguing that shouldn't have happened.
They're speaking of a line item, or the town council's contingency.
The town council
It's a
contingency
long
fund.
history of its usage as opposed to the cell tower fund where it's.
Yeah, the town council contingency fund, if you were to pull a budget to actuals up on that.
Right.
That money is routinely used. Now, you could argue that they should budget better and more transparently, but there are going to be expenses in a $16 or $18 million budget or whatever that they are not going to be aware of that they need. And that $180,000 is for that. To me, I look at that fund, Mr. Kennedy, as a regular, we're going to end up with things we didn't budget that's not in any of these budget items that we need to cover. Every year, we're going to have things we didn't recognize we needed. That's what that is for. It's a budgeted reserve. It's a budgeted kind of money every year, extra, like we don't know what's going to happen, but we know we're going to have some percentage that needs to be moved around. This cell tower fund to me is that liquid rainy day fund of, gosh, that's not good. Where are we going to get the money to pay for that? Because now if you had the money in the town council, you would go there first because it's already budgeted. You would go to the cell tower last to me because that is your rainy day fund. And then
it is, if you don't take out the what is the problem with the stipulation? The 512 stipulation?
to stick it back.
Yeah.
No, not that part. The borrowing taxes, budget shortfall or construction.
Construction.
So you don't like the,
I don't, personally, I don't think there should be, other than some, I'm not even sure there should be any restriction on the cell tower fund. I think, you know, the economic analysis is the same.
But
There is,
the restriction though is because of the warrant item and how the council in the past has used the cell phone tower. We were sitting here tonight and they said, we want to take $50,000 from the cell tower fund and put it in the general fund for an expense. Could they do that? Because, I mean, the cell tower was established,
Yeah.
but you have the right to go in there and take that money if at the financial town meeting, they approve it.
Yeah.
Right, because at some point.
3B cents, right?
No,
No.
that's only if it goes to the reserve fund. So what I'm saying is that when that 280 becomes $1 million, at some point on the council, they're gonna say, you know, 300,000 of it I want to spend on this and go to a financial town meeting and use that money.
Question, if you reject this, aren't you taking away the ability to go to this cell?
No, you just
Oh.
do it directly.
No,
you're
I
ending it, I think.
think it stops the council from taking money from the cell fund that they know they have to pay back.
Right.
Yeah.
What I'm saying, if they tell us, well, if you told the townspeople, I want to use some of that money, and this is what I want to use it for, and they say yes, I think you should.
That would be a special financial town meeting that you would have after an emergency. You would appropriate money out of the cell tower account for that purpose. You would just
I
have.
don't think it has to be an emergency.
No, I know, but I'm just saying, like, let's say there was some kind of need in town that the town said we need $120,000 or $50,000 or whatever it is, and it's not appropriated. They could ask for a special financial town meeting, appropriate the money out of the cell tower fund for that purpose.
But that's what I think this whole thing's about.
I know,
Is that
yeah,
if something did happen, they now can go get 100,000, knowing they have to pay it back.
but they have to pay it back.
And I'm saying next year they could say, I want to use 80,000 and we don't want to
Oh,
pay it
pay
back.
that back. I get, I like that,
I want
Scott.
to ask you a question. You said specifically that the contingency expense has a different impact on taxpayers. Right?
Because it's expensed every year.
Expense every year. And the other one, if you spend it, is not the same impact.
Doesn't have because there's no obligation to repay.
Okay, okay.
So it's a disbursement outside of the tax base.
The impact is that the next year there won't be anything to rely on should there be an emergency, right? Beyond.
That's how much you take,
Right.
And I'm trying to, the economic point is that there's something like $460,000 of what I could broadly describe as contingency funds. There's the expense and there's the cell tower fund. So there's $460,000 subject perhaps to some limitations on what they're used for. But I think I personally would agree that there should not be an obligation to reimburse. I do not believe that there should be any use of proceeds restriction on either account.
But you do think there should be two separate accounts, one that's line item every year?
I could make arguments on both sides.
I don't really understand why we have right now, essentially three accounts, but.
As an economic matter, you've got $460,000 floating around here someplace. How that gets spent is up to you and the town council.
Correct.
And as far as I'm concerned, that's jump ball. That's what you get paid for.
We get paid a lot.
Oh, but that's your job.
Well, they make more.
No, that's your job.
It is our job. You're right. It is the job. And I think that's why we're spending, I think that's the reason to try to stop for a moment, think about Article 3 and think about this process now that we've kind of figured out kind of where this money, what these accounts are, what their purposes are, their history and things. Thank you so much.
And what makes sense in 2026? What should we, how
Yeah.
should we have?
I think Scott actually brought up something, I think, mentioned something really valuable. And maybe it's a little art, but if you just leave 3 the way it is, and the council needed to go use $100,000 this year, next year you could appropriate $100,000 out of the cell phone tower account to fill it back to, right? I think you could use the appropriation to put it, I don't know how fluid that is, but if you could, I think you could do that. Is that not, but it would take it would be this year and next year's meeting that would do that. But to me, that's fraught with voter confusion.
More confusion.
I think people, we're already circled around like 10 hours worth of discussions on this particular thing. I would prefer if we just made an amendment to allow the town council to use the cell tower fund, the accumulated surplus in the cell tower fund of some amount for emergency. Yes, on the floor, we will do that. Yeah, we will not do it right now, but it will stay this way as it is in our budget book. And we will decide whether we endorse it or reject it tonight. But I would suggest that we offer an amendment to it to come up with language that fits the fact that there is a surplus in there, that we don't want to deplete it, but we also don't want to hamstring people into the next fiscal year to have to pay it back. To me, I think we just make a clean amendment to it. We propose that amendment at the meeting and we see if we can get enough people to vote for it.
Can the corollary of that be, which is not going to be voted on at the town meeting, that the charter just gets rid of this?
That's later.
Okay.
Later.
No, you should want to know, but I mean, at this point in the game, right? We have talked around the topic ad nauseum. And I think it's time to move forward with a vote.
Yeah. That's fine. Thank you, Jennifer.
The horse is dead. It got dead.
So do you have a motion, Jennifer?
Yeah, I move that we reject Article 3. And I'm fine with rejecting Article 3, and no amendment.
Okay.
I
That was the second?
rejecting it, but I would like.
No, but we have a second for rejecting Article 3, and do we have a discussion? We don't have to come up with an amendment tonight. That's not required.
Okay.
Scott?
Yeah, I'm gonna vote to keep it for one reason, that I think the mechanism in place is for the town council, when they make their budgets every year, they want to spend some money on the cell tower, that they send it over in their budget, saying they want to take 50,000 from the cell fund and they want to spend it and not pay it back.
But that's not what 3 is.
No, but 3, so I can live with 3 saying, if the council wants to use 100,000, they can. They just got to pay it back. And if they don't want to pay it back next time, goes in the budget, taking money out and not paying it back. At the final town meeting, the voters can say yes.
I'm gonna have to deal with this at town meeting. This is gonna be crazy at town meeting, what you're talking about now. If you make a recommendation to reject this, which is fine, and you're asking the voters to reject the article, done. There's no amendment that you can make then.
Okay.
Okay? Number 1. So you're done. No amendment. And to cook up a new reserve fund on the spot that then asks to take money out of a fund that voters have been putting in on the basis of 512, to then somehow take funds out of that don't have to be paid back is contrary to 512 for emergency expenditures. So legally, that's why I'm saying that scenario, you're gonna have to get the town solicitor to green light that one. Because that's gonna be pretty problematic
But the question, Larry, also is, does 512 still apply to this current fund, even though the name has changed and it's been consolidated? Does that?
But you can change the name and that's gonna be the basis for using money that was put under the basis of the article. I don't know. That's why you better ask the lawyer. I would say you read we're told the reserve fund, I'm asking, I asked in this question, because
Go
I
ahead.
think there's a balance in this section 512.
Oh, no.
512 deals with transactions between the cell tower fund and the reserve fund. I don't know, but I believe that the reserve fund has maybe some modest balance, if any. The cell tower fund has a balance of something north of 280.
Well, again, I'm lost again on that, on this section.
I just think it's
It's a placeholder account.
it is, the reserve fund is a placeholder. The cell tower fund has accumulates revenue. And I think the question before us is, do we continue with language that I find to be, I understand the mechanism behind it and I understand Scott's comment, but I still think it's year to year confusing about how that happens. And so what do we just punt? I mean, that's the question. If we don't amendment and we just get rid of it, then we're just taking the ability of the town council to use funds and put it back, which may be hamstringing them if they needed it.
No, you said it out loud yourself. If they need to use it, they can ask for a special financial town meeting.
You're right.
Let's be done with it.
Okay.
I
Scott?
go again with my proposal, whatever. I so move.
Right. Second.
We've already got a second. We're in discussion.
I have to say again, PS, I do think it's okay to say at the town meeting, we're working on clarifying this through the charter committee.
Yeah, sure.
And that's totally fair, but.
Put that in our letter, which we have to talk about next.
We are concentrating on
Yeah.
this meeting.
And Corey has to get up on the fan.
This is how you get it across to the town.
Okay, so Scott,
So you're gonna put it in your
I
letter.
just don't want to,
You only need 3 votes.
I know, I like that.
I just don't want to reject this and then hand tie the council if they need the money. I don't know if this is something that needs to, that the solution to this is a charter change, or if the solution to this is
Well,
get the solicitor involved.
Right, I just want to remind everybody too that we reject this. The voters at the town meeting have to say whether this is approved or not. We don't get to just reject it and not show up. It's going to be there. The voters can basically say, budget committee's crazy, we're going to approve it. The voters can say, well, I don't care what you said, we want to amend it, right? There could be lots of things but if we vote to kill it, it's done. So I think there's plenty of time to have discussions on it and to figure out what to do with it. This isn't the last time we're gonna talk about Article 3 or 5.
It's not, but it's just.
Is that you could have a special.
Like, Mr. Kenny could get up and make himself a motion if he wanted to.
And Article 3 be redrafted.
Yes, at the meeting, on the floor.
That may be the way that we can go forward. Right, just taking the wording as it exists today and changing it to whatever you want.
That's my argument for voting tonight to put a no, to reject on it, is to let people know that we're thinking about doing something different with it. So instead of just approving it and then surprising people and saying, well, we approved it, but then we want to offer an amendment to it. I'd rather people know that we didn't approve it and then offer an amendment to it. I think it's a better way to get people to pay attention to it.
Maybe not understanding the parliamentary procedure. I'm suggesting that as a result of tonight's discussion, the committee delete in its entirety Article 3 and substitute a new Article 3.
That is a motion from the floor. That does not happen tonight. Our only thing we can do tonight is look at what's written now and accept to say that we endorse or don't endorse it, basically, is I think the best way to look at it. We cannot touch that tonight. We can't touch the language tonight. It's a warrant article. It's already been, we're not going to change, we don't go in and change. Yeah. Yeah, we don't want to mess the clerk you published this already?
Oh, it's on the preliminary.
We just don't need to go in and go.
By the council, so you have to.
It's not our job to go in and like start rewriting what they've done. It's only our job to opine on our opinion of what those things, yes or no, basically. So my argument would be we reject it and then we come up with a fix before the meeting. And we work with Mr. Anderson and maybe some other people to do that.
So there was.
A motion on the floor with a.
There's already a motion on the floor. I got it seconded over here.
Is to reject the article.
The motion is to reject the article with no amendments. That's what Jennifer motioned and Allison seconded.
Oh, I thought Corey.
No, she beat him to it.
No amendments.
Wait,
That's tonight.
wait a minute.
There's two motions on the floor, actually.
No, Scott tried to say a motion, but that was part of the discussions.
I think that there's two. Yeah, mine was a discussion.
She can block amendments completely? No.
No. I know, I'm trying to explain to you. Okay, what it's already been said, we can't add an amendment here tonight. We have to reject it in totem.
But are we voting that you said no amendments?
You can change your.
Yes, because there can be no amendments tonight.
So then we just reject it. I would
Reject
add in no amendments.
Rejected, that's what I
So
said.
can you modify, would you be willing to modify your?
Stated reject with no amendments. Do you not want no amendments in?
I do not want any amendments.
Well, we're not gonna,
No, in this, I want to block number 3 and that's it.
Okay,
Okay,
yep,
I will remove the words where you said reject number 3 with no amendments.
right, just to reject number 3.
check number 3.
Yep, that's
I
fine.
was afraid we were voting in some way to
All,
block.
all those in favor?
Aye.
Opposed?
Aye.
We have 4 and Scott against.
Say aye to opposing. I think it's supposed to be nay.
It doesn't matter, you know. Got two laws.
We finished our.
Record time.
Oh, we're on for our screening.
You gotta be done. You're done.
Oh, Victoria, come on, you can.
Bye.
For things here that I.
Bye.
Okay, we can't cover everything that's in the budget book in our letter. Can't do that.
Had other things you told me that should be.
I know. And so I've got a letter here. Corey has to get to the printer tomorrow morning. We have to get the letter done.
Okay.
Okay, the only thing I would suggest that I circled when Jonathan was talking was to provide more accurate and transparent picture of departmental costs. That specifically was referring to information technology that.
Did read IT question marks.
Yeah, and so I think we should, we should say such as within information technology at the, so that's paragraph 7. It says, this provides a more accurate and transparent picture of departmental cost. And then I think we need to add a clause that just says such as the reorganization of information technology expenses, right? Something that. Gonna give people a little bit of time here. Thank you.
For example, the IT department.
Yeah, we'll just put I think information, not just the department.
Okay.
Cost of information technology, the cost of, right, because it's not the department, that it's just.
Well, the cost of information technology. Okay. So that takes away the third thing, and homestead you put in here.
I put Homestead in there,
Okay,
and I tried to warn,
crap, that is in there.
I tried to warn Homestead that this is like an informational more than,
3 years back and 5 years forward.
yeah, we didn't get there.
That's not in
Yeah,
there.
we'll take that out. That was aspirational.
Okay,
Yeah, that,
salary survey, is
Oh.
that aspirational?
no, that actually has been budgeted for.
So where does that?
And so let's see here, additional staffing, so let's see, no, that's not it.
When they're down where you go, the town.
We're on page, where are you exactly? Page 2, what?
I'm on the back. And you want to add something about,
Salary survey. So I'm going
That
through
should-
the list of all the things we said last week that we would add. The only thing left, we gave up on the forecast forward and back. The
Okay.
only thing now we have to add is salary survey, and we're talking about where would we want to add that?
We also expect the towns to complete accounting work, restore timely financial reporting, and have its books in order as soon as possible, as soon as feasible as well, and well before the end of the year, right? Maybe we could say there, in addition, the town is going to conduct a salary survey to review its staffing costs or its, I mean, it's not cost.
So in addition, the town is going to conduct a salary. survey.
People won't know what that is. We are chronically underpaid, the people who work in this town, and we need to see,
Just mention it.
I think we do because it's budgeted in there. It's.
A salary survey
Yeah, I think short and sweet.
Yeah, that's fine. Okay. Yeah, people want to ask about it, they can, but
Over talk.
Well, and this is where you start talking to your friends and your neighbors now,
yeah. I just,
so that they're educated.
I only know what a salary survey is because I saw one happen at the New England, like they did one up there and they realized how underpaid everybody was and they tried to fix it. Right.
I can figure out the
Right.
service, but
Okay.
All right, anything else you want to add?
no, so we.
I have no further suggestions. Whatever, I think it's,
Fine.
yeah, I think it's, I think it's
That's no problem with it.
That's how you get a letter through. You do it at 9.
Yeah, yeah.
Pretty much.
Went through this with.
We did. Allison's like the red that came out of it from the track changes on hers was pretty substantial.
Notice you added some things.
I did, but that's okay. All right, so we have to vote on this letter. Let me just get my agenda up so I can. So the item, we're on item 9, vote and discuss to approve the budget committee report and the letter to the voters. So we basically approved the report already, but with the warrant items, we're going to approve the rest of the report and the letters to the voters. Do you want to dispatch those in one or two motions?
Motion.
One motion? Can I get a motion?
So moved.
What?
To accept the budget booklet and the letter.
As written.
As an amendment,
Well, as,
that we've made here.
yeah, should I give you that?
Right, well, as, yes.
You've got the.
That time I did
Second?
Well, I did say amendment
So
aloud.
that's,
Allison.
we're going to give Allison the motion.
Yep.
And then who's,
I'll
Second.
second it.
and Scott's got the second. All those in favor?
Excuse me.
Aye.
Sorry.
No.
Jennifer motioned,
Oh,
Allison seconded.
that,
Yes.
okay.
Did you, what was Scott seconding?
He was trying to second.
Scott.
We're trying to help out.
Okay, all right, sorry.
We usually have many seconds to our motions as fast as you. can.
Okay, all right, that's fine, that's fine.
All those in favor?
Yes.
Aye.
Any opposed?
Okay.
Article 10, public input. Please, no public, I mean.
Public's leave.
We're losing the public very rapidly.
Stay for the next meeting, financial town meeting. Is that correct?
yes.
All
Our
right,
next meeting.
that's our next meeting.
And then I'm done.
Yeah.
But is,
Do you feel the need to continue to meet?
I personally like my life back, but it is, if we are we expecting with no, since we could not propose an amendment to number 3, warrant 3 here,
Don't have a rolling meeting.
and are we expecting to like,
We'll do this, Jennifer. How about this?
Plan an amendment in the.
well, that's what I'm trying to say.
That we can, one or two of you can do whatever you want. 3 of us cannot do anything without a meeting. So yes,
Yes, but you.
one or two of you
Already of.
can do what you wish, right? The three. No, we will not. We will not.
Yeah.
Committee in court before.
Right. We will not do that. Don't worry.
No. Somebody in the town though can.
No,
Amendments? Yes.
no, we will, if we were gonna, the question is do we have a meeting to discuss possibly putting an amendment forward to number 3?
Exactly.
I think that may be worth a meeting, but I think we can just sit on this for a few moments and we can email each other about having a meeting on that topic. That is possible to discuss that. And if we decide we wish to have a meeting on it, we can schedule a meeting. We just need to give notice.
Side.
We don't need another, next meeting is a financial town meeting.
I have one last
Yes.
question. So, because I've never done a financial town meeting from,
Oh, sure.
is there like, do we gather at 6:30? Is there?
Yeah, what I have done is try to get there at what time are you gonna plan on opening the doors?
Opening at 5 this year instead of 6 to try to allow the flow to flow better and,
Well, I know that you and Larry Larry said he has been meeting a lot to try to figure out this to be better, and I appreciate that. So I feel like it's a 7 o'clock, I think it's a 7 o'clock start.
It is.
I get there about an hour. I've gotten there an hour early or so before.
Okay.
Heads up, Jennifer. This is dress.
Yeah, and so
I got told at the last minute, I had to put on a dress.
I like for 10 minutes before the meeting, maybe. I was like, oh, by the way,
Yeah, and I went.
I'm in a suit, which will.
Where is it written in the charter?
It's tradition. It's just tradition, and you are welcome to carry with any tradition. I am a t-shirt and hat person. I teach in that all the time, but I wear a suit to that because when I first came to town, everybody was well dressed and I'm like, do I want to be the only one that is not in this? I think I'll dress up.
Be thankful that you told me.
So anyway, that's it. That's your point of information. Item 12, motion to adjourn.
Yes.
So moved.
All those in favor?
Aye.
Hi.
Boy.